Welcome back, everyone, to the Big Skinny with Lou Basenese. I couldn't be more excited for our next guest because he has been gracious to come and have a spirited conversation about all things crypto and Bitcoin, because I'm a tech guy, but this is one tech that I still haven't been able to get my arms or mind around, and I'm hoping that this conversation can help me get there. So without further ado, I'd like to welcome Anthony Pompliano, a fellow Paisan, to the show. Appreciate you joining us, Anthony.
Absolutely. Thanks for having me.
Yeah, man. Listen, we've crossed paths a bunch in the studios. I'm excited to have a conversation with you here. Let me set the stage quickly and help you understand where I'm coming from so you can help me understand what I don't understand yet. Always been a tech guy, early stage, and I always think there's early phases of adoption, right? And I wrote off Bitcoin as a fascination early on. I played it from about 3,000 to 14,000 and was like, oh, that was fun. But now, fast forward a couple years or more, and I'm realizing this is much more than a fascination. There's more going on. I understand the distributed ledger technology has tremendous potential. I'm there. But in terms of Bitcoin or other coins, I just don't understand it yet. But I know I need to, because there's three camps, right? There's the early adopters, then there's the majority, and then the late majority. And I don't want to be the last one in there. And if I look at this in terms of crypto, you're clued in, you're curious, or you're clueless. I'm in the curious phase, right? So help me understand. If I'm sitting here and I'm your friend from down the street that you grew up with that doesn't have a clue, what do you say to me? Like, why Bitcoin? What's so big of a deal about it?
Well, I think a big part of Bitcoin, just like any financial asset, is it depends on whether you got the problem or not. And the good news for Bitcoin holders is that everyone has the same problem, which is that the dollar or your choice of local currency continues to be debased. Over the last 5 years, from January of 2020 until today, the US dollar has lost 26% of its purchasing power. And so $1 from 2020 now buys you 74 cents worth of goods. And if you want to protect yourself from that, you have a couple of options. You can simply go and buy real estate. You can go and you can buy gold. You can go and you can buy stocks, or you can look for something that combines some of the value propositions of those different assets. And I think why people are drawn to Bitcoin is that it benefits from the devaluation of that currency, which is something that structurally exists. But it doesn't require you to try to pick individual securities and try to figure out what is the earnings, what is the multiple, what are the competitive risks, what is the regulatory treatment of this company in this specific industry. Instead, more similar to gold, it simply says this is an asset that you can store economic value in. But the benefit is that gold, although it has recently performed well, historically does not really appreciate that much.
Yeah.
It's more of a downside protection.
And it was a delayed response, too, with inflation, right? I mean, we had the Biden era where we had 9% inflation, and gold really wasn't making this leap up that it's made in the last 3 months here.
Yeah. And I think that there is, with Bitcoin, just very early to the adoption of this asset. And so most assets are, frankly, adopted top down. You have militaries and governments, and then you get the companies, and then only individuals. Kind of the idea of like put a laptop in everyone's desk, the people are last. And so Bitcoin has been the opposite. It's a bottoms-up adoption story, and people have been able to buy it now for 15 years. And so in a weird way, the higher the Bitcoin's price goes, the less risky it gets. And that's why you see these large pools of capital coming in. And so if you want to protect yourself from that currency devaluation, in the United States, we have 26%. Many other countries, it's way worse. And so I think that's why you've seen a very global adoption of this asset. Naturally, if you have a finite asset and there's increase in demand, price is going to go up. Yeah. And I think that's what people are excited about.
This is probably the most succinct explanation I've heard. It's really, so if, again, correct me if I'm wrong, paraphrasing here, it's an inflation hedge and it's a simplified one, right? You don't have to anticipate, like I've always resolved myself, hey, I'm going to find biotech and high growth tech stocks to hedge out inflation by making 40, 50, 60% returns. You're saying take all that nonsense and difficulty out of the equation. This is a store of value that will adjust as it has appropriately here and be a straightforward inflation hedge.
Yeah, I mean, one way to think about it is that if you take hedge funds, they have really big teams. They spend millions and millions of dollars a year trying to figure out where the quote unquote alpha is. If you, with your biotech stocks, were a fantastic investor and you return 50% a year every year for a decade, that would be amazing. But
it's not what I return. So
but the comparison to Bitcoin is that Bitcoiners have returned more than that, right? Right now, Bitcoin is compounding, depending on where the price is, for the last decade. It's somewhere between 60 to 75% annually, and that will come down over time. You're not going to continue to compound at 60 to 75% year over year. But even if you're still doing 30 or 40%.
Well,
And so what I
listen,
always tell
if banks
people,
keep running if countries keep running deficits, then there is really no end in sight to the appreciation potential here, right? I mean, it could theoretically compound at that rate with a limited supply and runaway government spending across the globe. I mean, that's the appeal, right? It's not too late in your mind. I mean, do you have a prediction for price that, that's not a John McAfee off the charts stupid one? Oh, that's reasonable?
yeah, look, I think about the compound annual growth rate, right? And so if it's currently compounding, call it, 65, 75%, whatever it is, let's just say that it does 30% and it continues to do that for the next decade. One, you're going to outperform almost every single hedge fund. And then on top of that, the price is going to end up being at a minimum hundreds of thousands of dollars, if not over $1 million, right? Depending on how long of a time frame you look out there at. And so I think that really Bitcoin, how high can it go comes down to, well, how low can the dollar go in terms of its purchasing power? And what we have seen is in 5 years, the dollar lost 26% of its purchasing power. And I don't see that changing anytime soon. Is that we're going to continue to devalue that currency to monetize the debt. And so, again, Bitcoin's not the only solution. You can buy real estate, you can buy stocks, you can buy gold. I just think that Bitcoin investors like the simplicity of savings technology. I just save in Bitcoin. And then they like the fact that it continues to outperform those other asset classes while really benefiting from the same thing.
Listen, man, I appreciate your perspective because in the past I've talked to gold bugs that are inflation, they think of it for inflation and devaluing of the currency, but they are a one-way street, right? It's always buy, never sell. They think of it as one of the only assets. You're saying, hey, it could be one of the assets in your mix that helps you hedge against inflation. So I appreciate that perspective. I want to bring in some of the readers the comments coming in from the viewers saying this is golden here. I'll take that. Is it golden or is it digital golden, Pookie? We're not sure. Anyone else join the conversation here? But before we get going to the next questions, if you got something, don't be afraid to chime in. Anthony, I want to talk to you about how do you handle the volatility though, right? So like here it is, I want it to be a store of value. To the man on the street and woman on the street, when they look at these swings in price and you're saying, hey, this is where I should save into Bitcoin, how do you address that concern? Like, don't check it day to day. Think of it as a long-term saving, like a CD where I've got to think of it being locked up for 6 months. I mean, how do you address that?
Yeah, look, I mean, there's a lot of ways to look at it, right? On one hand, one Bitcoin equals one Bitcoin, the same way that $1 equals $1, right? It's a Bitcoin is a Bitcoin. Now, I think what people are looking at is they're looking at that US dollar exchange price, and that's where they're seeing that volatility. And so over a long run, there's people who say, oh, Bitcoin is appreciating. Another way to think about it is that the dollar is crashing. Right. And you can the perspective is pretty important. But I do think that the day-to-day kind of volatility is something that people are actually seeking out. They don't want to avoid that. They want that volatility. And this is part of a broader theme, in my opinion, where the entire generation that is really coming into investing maybe over the last 10 years and will come in over the next 10 years, I call it the volatility generation. They want volatility. They understand that volatility equals returns, and volatility works in both directions, both up and down. You like it when it goes in your direction. You don't like it when it goes against you. But the nice thing is that most investors in Bitcoin, they are long. They're long-term holders, and so the volatility over the long run has been up, and therefore they're big fans of Bitcoin because if you're compounding at 75% a year for a decade, then you take not a lot of money and you can turn it into quite a bit of economic value.
Yeah, no, it all makes sense to me now. I mean, again, you're making this in terms that is understandable from, like I came out of classically trained asset allocation, private client group, right? We're going to look to optimize the efficient, Kerr hypothesis and all these things. But here's what I really want to get to, like, what do you think? You're talking long-term buy and hold, store of value. How do you handle the other side of the universe, just like I have to deal with it in microcap penny stock land of the traders, right? The altcoins that are nothing more than, than what I think of as penny stocks that get promoted on the pink sheets, right? How do you handle that, address that component of the crypto crowd?
Well, look, I think that people should be allowed to do whatever they want with their money. It's not really my game, if you will, to go and play in that world. But I understand why people want to do it. And there's no difference between playing the lottery, gambling on sports, or trying to pick the next, meme coin. And so some people do it for entertainment purposes. Some people do it because they think they've got an edge to drive a financial return. I don't think that you're going to change human nature. With that said, again, you really got to ask yourself, who am I? Am I a trader? Am I good at picking, pink sheets stocks? Or am I somebody who's more of a long-term investor and I simply get a good idea and then I take it very, very seriously? And I think that for me personally, getting one idea, taking it very seriously, like Bitcoin, has worked out well for me. But I've got friends who, they do very well in investing in other areas and, more power to them.
Yeah.
my big word of caution, I think, is just, if you're showing up to kind of Bitcoin and crypto and you think that the first thing that you're attracted to is to go and buy meme coins, I would really caution you to think about, do you know what you own, right? Kind
Yeah.
of the
Well,
timeless investing principle.
right.
And the truth is that most people, they got no clue, right? They're just gambling. And again, there's a place for gambling if you want to do it, but it's just not my thing.
No, it's a distinction. I think it's an important one too. I look at that, right? Penny stocks over to bulletin board stocks. That's just pure gambling. You're speculating on a greater fool theory that there's someone else out there that's going to buy into whatever you're buying and get you out of it. So a couple more questions coming here. I want to shout out to the thousands of people watching us on the live stream. Join the conversation. Don't be afraid to chime in. We got a few questions. Do you think Bitcoin will be a global currency for payments? This is interesting. Is it a currency, a commodity, or a security? What's your take?
Well, I split it up into the short term versus the long term. And the short term is definitely not going to be any sort of global currency for payments. The big thing is that you are disincentivized financially from spending an asset that's going to be worth more in the future. So I want to spend my dollars, which are going to lose value, and I want to hold my Bitcoin, which is going to appreciate in value. And so you can think of this very similar to you've got a checking and a savings account in kind of the electronic world of the legacy financial system. I think of Bitcoin as your digital savings account, and I think of stable coins or dollars as your digital checking account. You spend in your checking account, you don't touch your savings account. Over the long run, though, I think the big question mark is what happens to fiat currencies. If they continue to devalue them, we have seen this play out for thousands of years, hundreds of currencies. You can only devalue it for so long. And the U.S. dollar is in a great spot because it's the global reserve currency, and the United States is pretty prudent. Although they do devalue it pretty aggressively, it is the least of the bad choices. And so I think that the dollar is going to continue to strengthen for a long time as Bitcoin succeeds. But if for some reason they violate that trust with people and they end up actually devaluing it too much, then there is a chance that Bitcoin could become a global currency where people are willing to actually use it as a medium of exchange. And at that point, I would expect that the value would stop going up because things would just begin to get priced in Bitcoin. And
right,
so
you
then
out all
would
the
just be
margin.
trading.
Yeah. I mean, look, I think you're dead on. I agree with you. It's a relative world in terms of currencies and deficits and spending, and we're the least, the least bad of all the terrible ones. But how do you address the coming in, like, could it become a digital form of payment and currency? And then that would mean at some point the government's going to be involved, which was antithetical to my understanding of the early days and founding of crypto, right? Like we want to be deregulated, unregulated, but here we are staring this down. To be legitimate, we're going to be regulated.
Well, I don't think that any asset is regulated, right? The US dollar is not a regulated asset. It's an inanimate object. You can't put rules on it. You can't arrest it. You can't find it. The people and the companies that deal with dollars, they're regulated. And same thing with Bitcoin, right? You can't regulate Bitcoin. What you can do is regulate the companies and people. And so different jurisdictions have different rules. There's some places that have no rules. There's other places like the United States that believe in the rule of law. And we have, different rules that people need to follow. And so I just think that the government getting involved or large financial organizations, if you want mass adoption, that means you're going to get everybody. And so
no, I agree with that. That's the key
trade-offs.
hurdle, right? So the key, the friction to disruption is having it widely available, right? So if you get it into where now I can custody Bitcoin in any brokerage account or any banking account, I think that opens up to the mass populations in a way that we haven't seen before. Do you think the government establishing a strategic reserve starts to take a step in that direction? Like, how is that an accelerant to adoption for you?
Of course, right? There's a lot of other countries that have started to do stuff: El Salvador, Bhutan, Russia, Abu Dhabi.
Hold on, let's think about. Hold on, El Salvador, Bhutan, and Russia. Not necessarily the trend centers and other things, right? I mean, is that a contrarian indication, or are they just understanding because they're trying to control against Zimbabwe and inflation taking away, the value of their currency? I mean, how do you?
Look, I actually think that it's really important that small countries did it first. Take El Salvador as an example, right? You actually want to look on the fringes. The fringes adopt things first, and then it kind of moves to the consensus. And so the fact that El Salvador did it, they had some very unique attributes. They don't have their own currency. There was very concentrated leadership. They were somebody who was voted in specifically to create change. But if you look at El Salvador, not only is it a Bitcoin story, it's a real kind of revolution in terms of the leadership, right? I mean, they've really cracked down on crime. They took the most dangerous country in the world and they've made it very safe. They've been able to elicit tons of foreign investment into the country. They've been able to change the economic kind of situation of the country. And so I do think that you need these kind of new ideas, these, smaller countries that don't have or aren't subjected to the innovator's dilemma to be able to do this stuff. It's a whole different ballgame when the United States, the leader of the free world, steps in and says, we're going to set up a strategic Bitcoin reserve. And there's really kind of, now you're legitimizing this. And I think that you're going to kind of drive that mass adoption of countries to start to do this. And
Yeah.
so one of the things I think people are underestimating is that the United States of America, the government, is going to spend an inordinate amount of time trying to acquire as much Bitcoin as they possibly can. They are not going to sit there and just simply have 200,000 Bitcoin that are currently on the balance sheet.
No, I
I think
totally
that
agree
they
with
want
that.
to get millions of Bitcoin, and they're going to work really, really hard to do it.
Yeah, no, look, I've always thought as a distributed ledger, look, I'm a tech guy, and you're speaking my language about the innovator's dilemma and being adopted on the fringe. And like, this is what I was afraid of when we were going to have this conversation is I'm going to go, ah, shit. I should have seen this coming a lot sooner because of how I looked at new technologies, and now I've missed out on the run from 10 to 100,000. So I'm glad to hear that it's not too late in your view. But then how do you look at what's the next domino to fall to encourage more adoption, right? So strategic reserve, the U.S. government starts buying more because I think, is there a way that they start putting our whole federal spending on the blockchain? Is that something that all of a sudden legitimizes it more? What do you think is the next big win for crypto, for Bitcoin?
I think with Bitcoin, they established the strategic reserve, but when they start announcing that they're buying, I think right now people think they're just going to hold, but if they start actively buying, that will really kick off this kind of global FOMO, this race for who can accumulate the most amount of Bitcoin. And you're seeing this, right? You've seen MicroStrategy really ramp up their purchases. You've seen companies like MetaPlanet in Japan really ramp up their purchases. You now have GameStop going ahead and ramping up purchases.
Yeah, that's something I want to get to too is, how do you view this, right? Is this I look at it from the fiduciary responsibility to increase shareholder value, right? The main principle of a public company. And you're saying at GameStop, you have 4.8 billion plus the 1.3 billion you just did a convert on your balance sheet. And the best opportunity you can find is just go buy Bitcoin. Like, are you, I mean, I look at it again, I'm gonna be direct. I look at the shit coins going to shit co's, right? Like, if everyone starts adopting this, should the New York Stock Exchange and NASDAQ just be full of holding companies for Bitcoin? I mean, is that where we're going? Where does that stop?
Right. Well, right now, the New York Stock Exchange and NASDAQ is full of companies that are just holding cash, and that cash is losing value every single day. And then they try to put it in treasuries, and the treasuries have a negative real rate of return if you look at the actual inflation number, not the government number. And so from that standpoint, already they have a big problem on their hands. Is you're watching, Warren Buffett in Berkshire literally has $300 billion of cash. He's losing tens of billions of dollars a year in that value. And again, that's his strategy. He's a very good investor. He's done very well throughout his career.
Well, that's because he knows the next downturn he's going to get a sweetheart deal to come into the banks or into Apple and get preferred returns so he can make up that difference that we don't have. But so you don't see it as a problem. I mean, I think harken back to the .com days. Everyone slapped a .com on their name, or go back to the marijuana craze when it was first being legalized. Everyone found a way there. Then the early days of the Bitcoin runs, that everyone was becoming a crypto company. Is there a risk there? I mean, do you have a warning? Like, do you think investors should be careful about buying pubcos that want to hold Bitcoin versus just investing directly in the asset?
Look, just like anything, right? If there are certain people who will execute well and there's certain people who won't. And I think that's really what you're ultimately trying to evaluate is these things can trade at these multiples. And so you want to make sure that you're not buying into a stock where there's an incredible multiple compared to the Bitcoin on their balance sheet. But also you want to just invest with people who you think are smart. And so there's a bunch of companies who hold Bitcoin today. If you go and you look at each one of those companies, you can pretty much separate them out. Some of them seem to be really smart and great at execution. Others seem to be more full of dreams than actual the ability to execute. And so that's no different than any industry. You just want to be able to sift through that stuff. And then on top of that, I think that you can kind of look at what have they been able to do, right? There's certain companies that are able to get financing and tap the capital markets. And then there's other companies who can't do that. And
Right.
the more that you can kind of figure out, okay, who's likely to be able to execute this, those are the people where I think dollars will flow to.
Yeah, I just look at it again. I'm coming out of a 3-year stint in investment banking where you saw every toxic deal you can see in the world. Toxic convertible preferreds and death spirals, and I start seeing GameStop go in and do a convertible offering and wonder, are there ratchets in it? I haven't read the filings to know how bad it is. So it's like I look at that and see how quickly it can go against the company, just like leverage does against investors. Sometimes it cuts both ways. So that gets me scared about that. Let's go to some more questions here. I know you got a hard out in a couple minutes. We'll make sure we get to that. But I know there's Mike F asks, is Bitcoin's blockchain hackable?
No.
No.
When you look
what
at
about through quantum computing, right? I mean, is that a threat to the impervious blockchain?
Quantum computing isn't a threat to anybody because quantum computers don't exist. They will one day, but quantum computers have not yet
It's a
been
good
created.
one.
So,
I'm stealing
you
that
know,
one, man.
yeah, well, look, quantum computing is obviously something that people are very worried about. There's a lot of promise to the ability to have, intense computational problems solved very quickly in a way that can't be done today. There would be profound impact on productivity and, kind of outcomes for people and companies once
Right.
we create that technology. It is just years, if not a decade plus away.
Agreed.
And so it's, not very, I think, it's not worth your time to worry about those issues yet. Maybe there will be a day where we need to worry about it, but right now it's not a problem. And then in terms of the Bitcoin blockchain, the best way to put this into perspective is if you take all of the computing power of Amazon's AWS servers, all of Google's their cloud, and Microsoft's Azure product, and you take all that computing power from those three providers and you combine it all together, that does not even equal 1% of Bitcoin's computing network. Bitcoin is by far the largest computer network in the world. And the reason why that's important is because that ultimately is the security of the network. It's a
Right.
decentralized network that can resist any sort of hack. And so this thing has just become this monster computer network that is very, very secure. And no one's ever been able to crack it.
So when you read the headlines, it's not that the blockchain is being hacked; it's this user accounts are being hacked more than anything, right? It's it's the same thing in cybersecurity, right? The biggest threats are not posed by the technology being weak or inferior; it's the human problem, and that's us not being that bright about securing networks and passwords.
Yeah, I think about it like dollars. Like no one's ever hacked the Fed or the Treasury, but when the money goes into an armored truck, those get broken into. If it goes into a bank, those get robbed. If it goes into someone's pocket, then they get robbed as well, right? You don't want that stuff to happen, but it happens. The further you get away from the creation point of the money, the less secure it is. Same with Bitcoin. When Bitcoin's on the blockchain, it's very secure. If you take it and you put it on an exchange or you put it into a wallet and you do things that you shouldn't do, then obviously you're increasing risk and there's always an issue.
Yeah. So another question here from Mike is, do you think too little supply? What is it, 22 million ultimate Bitcoins left? I mean, is that too little? Do we get into a world where Bitcoin trades at like a Berkshire Hathaway price, $800,000 per Bitcoin?
Yeah, there will only ever be 21 million Bitcoin. The nice thing about Bitcoin is that it is divisible by 8 decimal places. And so one thing that you'll probably see over time is that we will go from talking about Bitcoin to Sats, S-A-T-S, and those are the individual components. Think of it as like there's 100 cents in a dollar, right? We obviously have these smaller components. And so I think that as the price of one Bitcoin goes higher and higher, people will start to think much more about how many Sats are they holding, buying, selling, spending, more so than a single Bitcoin.
No, that makes sense. And look, before we get to any other questions, I want to make sure we make time for you to talk about your book, which I've begun reading here. I know it's a chore to write a book. I think you've done a really special thing here. Making one of the quotes that stood out to me is that making worthwhile things takes momentum, and 2 crappy pages a day is how you get there. Really appreciate that. You create it, then you got to sustain it. But why don't you tell us about your book and why everyone, what was the genesis of it and why should they go out and buy it?
Yeah, well, they don't need to go buy it. I wrote the book.
I'm going to tell them to buy it.
You can tell them. Okay. Look, I wrote 65 letters to my children, and the general idea was I've got 2 very young kids, and I wanted to kind of write down what are the things that I would like them to know. And those things can be, very kind of complex, difficult lessons to learn, and some of them can be very simple things that are more of a reminder. And I tried to weave in personal stories of how I learned those lessons and kind of, what stood out or what made me realize that they were important. And so by putting the book together, I always say that I don't care if people buy the book. I wrote it because I want my kids to read it, and I want my kids to learn from it. And if other people benefit, then that'd be great as well. But it was something that was very rewarding for me to kind of sit down and write, and hopefully be valuable to my kids over time as well.
Listen, I'm appreciating it. I'm kind of halfway through it at this point. Came from a dad who taught me from the old stories that he's in the studio right now, the old Italian guys, watch what they do, not what they say. Trust your mother, but cut the deck. So, there's valuable wisdom in all those sayings, but then I think you're seeing it in action. So you won't do it, but I'm going to tell everyone, we'll put up a code on the screen to go buy Anthony's book. You will benefit. I love it because it's in line with the big skinny approach. It's very easy to digest, short chapters that are just packed with value. So we got a couple minutes here, about 2 minutes before we go. Maybe one more question, or let me leave it with you. Last word to you. What do you think is the biggest thing that people misunderstand about Bitcoin and crypto that they need to realize and fast?
I think that Bitcoin is a software solution that incorporates all the timeless investing principles that people have grown to understand and believe. And so, if you think about what is Bitcoin, Bitcoin basically takes the idea of how the democratic participation and governance of the U.S. government. There's three different kind of governing bodies. There's checks and balances. We take the ideas of freedom of speech, private property, and we codify them in something like Bitcoin. And then the investor relationship with that asset is no different than Warren Buffett saying, buy great assets and hold them forever. And so when you go and you take a look at, well, how do you acquire Bitcoin? It's dollar cost averaging. It's not being price sensitive. It's not worrying about whether there's fear or greed in the market, but simply saying to yourself over time, I want to continue to acquire a great asset and I want to hold it for a very long period of time. And so in a weird way, Bitcoin, although it looks new, although it looks like it is something that is very different, it actually fits very well into those timeless investing principles. And I think that that's why you see so many very smart investors eventually saying to themselves, wait a second, this thing is more like the way that I invest than I otherwise thought. And so let me go ahead and buy some.
Yeah, listen, I appreciate you for bringing me along on that journey because like I was originally with technical analysis, I dismissed it, but too many people pay attention to it where you got to pay attention. That's how I would describe where I'm at with Bitcoin, and I really appreciate you taking the time and walking into a place where I could have been very negative because I'm not understanding it and walking me through that. So I know other people have benefited. Your time's valuable. Thanks for sharing it with us. I know everyone else enjoyed it, and thanks again, Anthony.
Absolutely. Thanks so much, Lou.